reality is that the fundamentals are absolutely great. And as far as a weak currency is concerned, everyone would like a weak currency. China wants a weak currency. Japan wants a weak currency. And the fact that Europe doesn't have one is hurting them tremendously. So if I'm looking to place money, I would love to buy American stocks on this dip. I'm not saying you have to buy everything tomorrow morning or Monday morning. What I am saying, though, is that this is an incredible opportunity. We've seen this movie before. And Peter, you know what? You can make these predictions and ultimately be right after a couple of years.
All right, guys, I want to step back just here to wrap things up in this particular segment. We had the Federal Reserve intervene by cutting the discount rate, signaling that maybe bigger cuts are to follow in other key rates. They flooded the banking system with a lot of money to kind of calm nerves. Is the worst over or the worst yet to come? Charles, you were just speaking. What do you think?
I think volatility is going to be here until we can look at the books of major financials, so that means until the next round of earnings. But I think the worst is over.
Ben?
Well, I think stocks will be a heck of a lot higher a year from now than they are now.
Tracy?
Yeah, but we have more volatility to go, at least through September.
Stuart?
The big banks, the central banks, still have plenty of big guns to fire. They'll fire them when necessary. The worst is over.
Peter, I guess razor blades are in order?
The worst is yet to come. The fundamentals are not sound. They're awful. If the fundamentals were sound, we wouldn't be having these problems.
All right, fair and balanced, all views discussed here. All right, one silver lining in the market's recent downturn is you can grab some top-quality stocks at pretty much bargain prices. The 5-star stocks, our gang says, are priced so low, you'd be crazy not to buy them. All right, welcome back. It is not every day you get to buy blue-chip stocks at discount prices, but our pros say you can do that right now. It's time to get more for your money. Ben, what have you got, my friend?
Well, the financials, as I keep saying, are just super bargains. I particularly like Merrill Lynch, which is an astonishingly well-run company. You know, a couple of days ago it was trading at barely more than 7 times earnings. Financials typically trade at a low P, but this is a joke. This stock is, they might as well be putting it in cereal boxes and giving it away. That's how cheap it is.
Charles, what do you think of that?
Yeah, I like the financials, too. Merrill isn't my top pick in the group. I think Bear is probably the cheapest, although the riskiest, and some of the others are better. But, you know, the financials are a great place, absolutely.
So what are you doing, Charles?
I like St. Jude Medical. I just think it's one of these great companies. They're in the heart valves, defibrillators. They're taking market
comes in
share.
handy in this market. Yeah, go ahead.
It definitely comes in handy in this market, and it's one of these things that's going to do very well. Eventually, they're going to be taken over, probably by Johnson & Johnson.
Ben, what do you think of that?
I think it's an extremely good pick, and I would not. I would buy it. I don't usually buy individual stocks, but I might buy that one.
Interesting. All right, Peter, what are you doing?
Well, I mean, if you're going to buy something in the United States, you might as well stick with the gold stocks. I think they've gotten beaten up in the last couple of weeks with a lot of liquidity problems.
Didn't they also get beaten up on the idea that there's going to be a slowdown?
Well, there's going to be a slowdown, but there's also going to be inflation, and that's very bullish for precious metals. It's bullish for gold, and I like Newmont Mining. I haven't bought a lot of it recently. It's been a laggard, but I like the action in the last couple of weeks. I think it's bottomed out, and I think the stock's going to lead on the way up.
Tracy?
I don't know. There's a lot of management changes going on, and gold didn't respond the way we would have hoped during this whole equity crisis. So
it held up better than a lot of other assets, and again, it's a liquidity problem right now. People are having to meet margin calls. They're getting redemptions. They're selling whatever they can. There are buyers
are they going to meet them with gold?
Right.
Well, they have to sell what they can to get cash.
All right, Tracy, what are you doing?
I, again, like Ben, like the financials. I like Goldman Sachs. It's like getting Dolce & Gabbana on sale. This is the creme de la creme of Wall Street. It's cheap.
Isn't it still up substantially year over year, though?
It is down, and it's probably actually going to go further, and I think that people should start nibbling at this thing.
Peter, what do you think of that?
Look, stay away from the financials. They're toxic. They're not cheap. They're expensive. You think they're at...
Well, let me finish. So pessimistic.
Let me finish. You think they're at low PEs. They have no earnings. Their earnings are going to disappear. I remember a year ago...
They have no earnings. Their earnings are huge.
Ben, last year when people were
talking about
last year when people were recommending home builders and they were talking about they're at 5 or 6 times earnings, I said those earnings are fantasy. They're not going to be here.
Fantasy about that.
There's a lot of losses coming up in the future. These financials are going to get hit, and they're going to get hit hard. Don't believe what these forecasts are for future earnings. No, it's not. They're going lower.
All right, Peter, I wish we had more time with you. I know you want to continue that expose on Santa Claus. He's a fraud. But Peter, great seeing you. Great seeing you.
Nice to be here.
Fair and balanced. You got all sides here.